All right, as promised, we're going to talk about demand pickup and is it going through or not. Thermax is the company on our radar. The company has been, struggling as far as winning orders. It's been challenging in such an environment for the company, but to find out if there's been any improvement in Q4 and where they're witnessing conversion of inquiries the most, we speak to Ashish Bhandari, the MD and CEO of Thermax. Ashish, thank you so much for joining us on the show. It's a pleasure having you. That's the first question. It has been such a challenge to really bag orders, and even execution has had its own issues. But how are we currently? And in terms of order wins, what's the status for Thermax?
Good morning, Lata and Sonia, and thank you very much for having me on the program. You would have seen that over the last 3 quarters, after the pandemic started, in each quarter, our performance has improved. And in the last quarter, which we finished in December, the numbers were almost in line with where we were a year ago. And in the next 3 months, as the weather has started to get hotter, looks like the economy is also picking up. And across the board, our order situation continues to get better as well. We still have not announced any major big orders, which will require an announcement to the street, but that really does not worry us. Yeah, our focus is on multi-sector, making sure that we continue to get demand across industries, which is something that we are seeing in textiles, in cement, in food, steel, oil and gas. So across multiple sectors, we are seeing a fair bit of pickup in orders and inquiries. Execution is starting to get better on the ground as well.
Ashish, can you give us some kind of ordering, which are the sectors that are giving you more orders than others?
So when we started the recovery, the initial set of orders were more from food, pharma, chemicals, as one would have expected. As I look at this current quarter and as I look at our overall inquiry pipeline, I can say that it is truly a broad-based recovery. Across all segments, we are seeing, for example, sponge iron has shown significant amount of recovery. There are several new steel plants that are going through expansions. Cement plants, new cement plants coming up. A lot of existing plants are going through improvement in the way they use energy, which means greening up the energy uses using waste heat recovery solutions. In certain cases, we have mining customers that are looking at biomass and new forms of energy. So in all sectors across the economy right now, the recovery is decent. I would not say that this is like spectacular the way it was after 2010, where all factories were full, etc. We still have capacity, but the situation is certainly much better than what it was any time over the last 12 to 15 months, I would say.
Oh, that's good to hear. That means better than pre-COVID, you're saying. What's the capacity utilization, if you can have a number like that?
I think I would hate to say that right now. I would say the capacity utilization changes also from the various sub-segments that we have. In certain segments like specialty chemicals, we have just increased capacity and we again are ramping up, hoping to fill that capacity as well. That is driven primarily by exports. On the domestic front, on our boilers, which is the single biggest product that we have, there our capacities are going up. We have crossed 80%, but we have potential to increase capacity as needed by making some modifications to a plant setup, etc. And we are looking at what all we can do to increase capacity should demand continue to be as strong and continue to get stronger.
So you said demand has picked up and orders are also coming through, but it really hasn't reflected in your numbers, right? I mean, in 9 months FY21, the revenues are still down almost 27%. Sitting on a base of around 3,200 crores, what could the full year look like? And what are you targeting in FY22?
So I think I would, as I said, it's because we are in March, it would not be right for me to give projections so late to the end of the month. As you could have imagined, the first quarter was practically a washout for Thermax here. So not only because orders were short, because many of our customers were were shut down for a variety of reasons relating to the pandemic. We just had 1 month of working in the first quarter. With each subsequent quarter, our numbers have continued to get better. In our last quarter, which you would have seen, we were right on top of where we were a year ago. And our profitability was actually slightly better on most metrics than where we were a year ago. You would see that trend continue in subsequent quarters as well. So you would see strength in the numbers across the board. I don't think we would be anywhere relative to where we were when we started this financial year.
Ashish, what is the problem in giving numbers? You're not in a silent period. We just had Jagannathan from TTK Prestige, and he was giving whatever numbers he could possibly give. I mean, expansions, utilization.
Typically,
sales. So what is the problem in saying what is your order book? I mean, you're not in silent period, right?
No, we are not yet, but we are still 3 weeks to go. And somehow, for many of us, the last 3 weeks are the busiest, where we get quite a few orders, which are very close to finalization. And depending on how they go, the numbers could be a little bit or more than a little bit here or there. So I would rather just wait, and pretty soon, within a month, you will see some of our numbers coming.
Fair enough. So do you feel that your revenues can hit, say, 6,000 crore or whatever next year? I mean, this year, obviously, you all lost a quarter and a half. So perhaps you will not make to that 5,500, which you all did. I think you all did 5,700 in FY20. You may fall short of it, but do you think you can make up lost ground in FY22?
Metrics, I would say we are planning on a significant amount of growth for next year. We do not think we will get to a number which is our best ever, but the attempt and the push will be to get somewhere close in that area. Yep. So 2019, which was the cleanest year we have in recent history, right before the pandemic. That is a reference year for Thermax as it looks at 2022. And in terms of our order pipeline, in terms of the revenues, in terms of profitability, our expectation is that's a good target year to look at, though our mix would be very, very different. Yeah, we are seeing a lot more orders, lot more opportunities, and we proactively are working also in an area where our lot of the opportunities we are looking at is in the segment of clean energy, clean water, clean air. And so that portion, with new technologies coming in, new ways of providing solutions to the customer, we do expect our mix to be a lot more different.
Actually, even I was looking at FY19 as your reference point. That's when you did 5,973 crore to be precise, almost 6,000 crore, and your profit also was a high of 325 crores. So that was my reference point as well. And you say that would be a good target for FY22.
For next.
Okay. Will margins be impacted because everyone's talking about the higher raw material prices?
So margins is where the rubber hits the road. Yeah, because on one hand you're seeing demand, you're seeing capacity utilization, but many of your projects are, even the new inquiries, the expectations from customers in terms of pricing continues to be lower than what we think is reasonable. And we are seeing steel prices continue to be at a high level. Oil prices are going up. Transportation and logistics are at some of their highest prices. So a lot will depend on our ability to increase prices in this environment as our costs are coming up. And in the same way, continue to drive costs down by leveraging digital, by finding new ways of improving productivity. And all of that continues to be our focus. On the margin side, especially with how the commodity prices are going up, and that I would say is a little bit of a red flag for the economy as a whole as well. If inflation comes in commodity prices in a very real way, it has an opportunity to derail the larger growth story that India has as well. So on the margin side, we have a very close look, and part of the reason why I can't commit to you on an orders number is because many of the new opportunities and new deals have got very critical pricing decisions that ultimately affect margins, which are all underway right now.
Okay, just one final question. You are, of course, undergoing this big cost-cutting program as well. Can you tell us how much you have achieved so far in terms of cutting costs, and how much more can you do over the next 6 to 12 months?
So if you take a look at when our revenues fell down, and the first 6 months of this year is a good testament, even across the 9 months, we were able to cut our fixed costs in line, and in most cases, more than what our top line went down. Now, as that recovery comes through, the question is how much of those cost cuts are we able to sustain? And while we know some amount of discretionary spending will have to come into play, especially around travel, there are many areas around digital, etc., where we do want to spend. We want to grow R&D as well, where we want to continue to spend. Overall, I would expect that many of the good habits that we have learned during the pandemic, all of those that we will, those actions, we are expecting to continue to maintain in the next year. And even on the headcount side, as revenue increases, we have no plans to increase our base costs and our fixed spending through people or otherwise.